Welcome to the channel. In this video, you're going to learn one of the most important tools in technical analysis, trend lines. By the end, you'll know what a trend line actually is, how to draw a trend line the right way, how to use it effectively in your trading decisions, and the common mistakes most traders make when working with trend lines. New here? Tap that subscribe button and let's dive in. Most traders draw trend lines wrong, and the chart punishes them fast. Lines float in space, price pokes through, and confidence evaporates. In the next few minutes, I'll fix that with one simple, repeatable rule set you can run on any market. First, I'll show you what a bad line looks like. It slices through noise, ignores clear swing points, and gets redrawn every time price moves. That's not analysis, that's hoping. Then I'll show you the clean version. Two obvious anchors, extended forward, waiting for the market to confirm. No chasing, no guessing. If your trend lines break the moment you place a trade, it's not because trend lines don't work, it's because they're drawn without standards. Today, we use standards. Watch how a proper line frames structure, guides risk, and exposes clean entries. What is a trend line? A trend line is a visual tool that connects swing points to reveal direction and rhythm. In an uptrend, connect higher lows. In a downtrend, connect lower highs. Two touches define the idea. The third touch is the test that tells you whether structure matters. Treat the line as a zone, not a razor. Price can wick, hesitate, and still respect it. Think of the line as the slope of the market's heartbeat. Too steep and it breaks on the next breath. Too shallow and it doesn't frame the move. Your job is to anchor to the most obvious pivots that nearly everyone would agree on. Consistency is everything. If you use wicks, stick with wicks. If you prefer bodies, stay with bodies. The point isn't to predict perfectly. It's to define a clean area where risk is small and reward is meaningful. Want clarity fast? Draw fewer, better lines and let the market prove you right. A valid line reduces decision fatigue. It tells you where you're wrong quickly and where continuation has room to run. Think of it as the market's rail. Price rides it until new information breaks the slope. Still unsure which swings count? Ask whether most traders would mark the same pivots. If not, wait for clearer structure. How to draw a correct trend line. Pick the time frame you plan to execute on and confirm on the next higher time frame to avoid tunnel vision. Identify the impulse and pullback that created clear swings. Then anchor two clean points without forcing anything. Extend the line forward. Never retroactively bend it to fit. Decide up front whether you're anchoring to wicks or candle bodies and be consistent. If your line passes through obvious price action just to touch more points, it's wrong. The third touch is your validation moment. Either you see respect and structure forms, or you don't. When price breaks a clean line, wait for the candle close and a retest from the other side before acting. That prevents you from buying the poke or shorting the trap. Confluence is what makes a trend line powerful, because a line by itself is only guidance. A trend line is only a guide until other clues back it up. The more signs that agree, the stronger the setup. First, look for key levels where price reacted before. Horizontal support or resistance. If your trendline touch happens right where price has previously bounced or stalled, it carries more weight. Next, check momentum by adding moving averages such as the 20 or 50 EMA. When price pulls back and hits both your trendline and one of these averages, that's a higher quality signal. Watch the clock as well. Big moves often begin when major markets like London or New York open. If the price test of your line happens during these active sessions, it's more meaningful. Finally, check volume. Rising volume shows the market accepts the move. Weak or drying volume signals possible rejection. If at least two of these, level, momentum, timing, or volume, line up with your trend line, you have a solid trade idea. If they don't match, stay patient and skip it. Confluence is about alignment, not perfection. Quick break. If you're getting value so far, take a quick second to like the video. It tells the algorithm this content helps traders like you. And if you're new here, subscribe so you don't miss the next breakdown. Entries, stops, and targets. Third touch rejection. Wait for a rejection candle at the line with rising volume. Enter on the close or a tiny pullback. Stop. Just beyond the line or the prior swing. Target. Prior structure or 1.5 to 2R, scaling as momentum confirms. Break. Retest. Demand a full close through the line, then a pullback that holds from the other side. Enter on a reclaim of the break candle's body or a micro higher low. Invalidation. A close back through the line. Channel ride. Clone the line to create a parallel channel. Buy the lower boundary in an uptrend. Take partials at midline and trim near the upper boundary. Reverse that in downtrends. For all entries, avoid chasing mids. Let price come to you. Use alerts at the line. React, don't predict. Targets should live at logical magnets. Prior highs, lows, measured moves, or channel edges. If the market accelerates in your favor, trail under structure and let it breathe. On failed breakouts, flip your bias only after the close confirms rejection. Don't revenge trade the first spike. Risk a fixed percentage per idea. 0.5% to 1.0% keeps you in the game. Position size formula. Size equals account times risk percent divided by entry minus stop. If the line fails, exit without debate. The market's verdict is final. Use a time stop. If price hasn't moved away from the line within a set number of candles, close the trade and recycle your capital. Advance your stop to break even only after price breaks structure in your favor, not at the first green candle. Scale out on the way into targets to pay yourself, but keep a runner if trend strength is obvious. Avoid doubling down on a busted line. New info means new trades. One more filter. If higher time frame disagrees violently, trade smaller or pass. Let's hit the common mistakes. Rapid fire. Forcing lines through noise? Delete it. Anchors must be obvious. Mixing wicks and bodies? Pick one method and stay loyal. Adjusting the line once you're in the trade? That's coping, not trading. Jumping into a mid-breakout without a candle close? You're volunteering for whipsaws. Ignoring higher time frame context? That's how you short an uptrend or buy a bleed. Treating a trend line like a razor instead of a zone? You'll get wicked out right before the move. Sloppy risk sizing? A perfect read can't save a bloated position. Overdrawing? 2 clean lines beat 8 mediocre ones. Fix it with one rule set. Clean anchors, wait for the close, stack confluence, define invalidation, and execute the plan you wrote before emotions showed up.